Hey, it's Mark from Stock Pursuit and the Twitter account. I'm gonna go through some charts here. I went through some scans and found some interesting things going on here, and looks to be some setups on some breakouts going on. So let's jump right into these charts here. The first ones we're gonna look at are these dry bulk shippers. And months ago, back in October of last year, I did a Substack report on this deep value stock, IMPP, and IMPP hit my scans for as a deep value stock, like a net liquidation play. So it was trading for less than its liquidation value, basically. And sometimes you find ones that are actually pretty decent out there, but the main thing that I found about that one was that the the dry bulk shipping was sort of coming around, coming back. Like there's some rotation back into shippers, and even I think IMPP had already been up a little bit at that point, and the dry bulk, the Baltic Dry Index was bottomed out and uptrending, and it just had some strength. So there's a lot of fundamental things going on with that one that sort of set the tone for that stock to get accumulated. And when I found it back in October, it was like a dollar or something a share. It was really cheap penny stock. I found it back in like middle October. It was like $1.90 a share, and it had already been uptrending off of the low back then. Like it bottomed out at about around 120 a share, and it just got accumulated with the rest of the shippers, and there's a really big return there. And today it was up 11%. It just came off another bullish pennant there. It really does these triangular pennants. That's the second one it did that was just really clear. So it did another one there and here. And you can see that pretty well there. It still has a lot of momentum, and it's got strong uptrend going off of that triangle support there. So I expect this one just to keep going because I'm seeing a lot of positive things going on here with these shipping stocks still. Like I just noticed that one of my other favorite ones fundamentally is the GOGL, and the GOGL it just broke out over a level. So this one was in a channel for a long time. It even ran after the IMPP. The IMPP ran first, or started getting some accumulation, and then the GOGL, it had some resistance levels going back and like spring of 23, and I found that key level from the levels in 2022 too. In 2022, it found these levels here as support, and then it hit them back as resistance. So that level there is a big level, and we just broke over that level today. So the fundamentals, or rather the technicals on this one, are really good too. So not all of them are the same. Like a lot of them are a little weaker, but the GOGL's been the strongest here. And then the TK, I alerted this one. I put this one on my Twitter account the other day because it's had a lot of strength in pretty much all of January. It's been breaking out, so it just continues to break out, and it's got a really strong uptrend. It came off a flag too. It's just doing off these little high flags here. Like there's a high flag there and a high flag there. So like there and there, and the momentum's really strong on this one still too. It's a TK shipper, and the ship's kind of falling apart there. Like the ship was one of the strongest ones, but not so much now. But I found another one today, the CTRM, it's I can't vouch for the fundamentals. It's more of a trade. If it keeps breaking out, like if it goes over 53 cents a share, it's a trade. But I can't really say anything positive about the fundamentals because it looks like on Yahoo Finance it was showing it just had one employee, so it's probably not a good thing. So I can't really vouch for this one, and I'm guessing the history is pretty bad too. But looks like it can spike though. It spiked in 2021 and it spiked in 2019 too, but for the most part, it's just been a loser. So this is just a trade. You know, if it, I wish I had found it yesterday because it was a buy on that flag break because we've got a bull flag going right here. We've got this bull flag that's really clear and on some descending volume overall. So that's kind of the key too. You don't want to see the volume, the sell volume spike. So the sell volume is pretty light compared to these buying days here, and then just a nice little breakout over that flag there. So I think the profit taking area is like 65 cents. If it gets there or not earlier. So that's a setup though, because that's a good bull flag right there. That's what I call a long bull flag, and those have really good expectancy from what I've tracked. So that's a good one too, and that wraps up the shippers. The SBLK is one of my other ones that I like fundamentally, and they've got a good history, but it's not really doing much here. It needs to break out again with the rest of them, because some of these just aren't strong. GLBS, we'll see what this one does. It looks like it's still in a long bull flag, or like it's just a consolidation. It's not really like a clean bull flag, but those are the ones I liked in the in the shipping sector still. So let's go to the indices now, because I saw something interesting with the Russell 2000. Like I said in the other video, it hit that level there and failed, and that's a level I found from going way back, and it tried to go above it again today, and the high was 198.59 yesterday, and it hit 198.46 today, so it couldn't even hit. It basically topped out there. It's a top, so, and it had a pretty bad print off of that too today. Not really super bad. It's down like a percent, but I mean it's not like it's a doji or something. Like the candle's pretty nasty. So the but the thing to look at really is the RTY, and it's pretty much the same thing, but it's actually worse. Like the RTY you can really see, which is just the actual futures themselves. It did a doji off of the level, and then I'm looking at this teal kind of Carolina blue right there. It printed off of that a doji, and then it's shooting star yesterday, or actually today, because the futures just opened up there. But some pretty nasty prints there, which you don't want to see at a level like that. So we'll see what it does. Like, I have a feeling we're gonna get a correction here, mostly from that, and just the Nasdaq's been running for a lot of days, and it looks, as far as the trends here go, like that day yesterday or today was it's kind of a shooting star, it looks like. And then you got Jim Cramer tweeting about tech in the morning, which is, I found his morning tweets at like 4 a.m. That's when his inverse works the best, is from what I've seen, been watching the past few months, several months. I don't always see his 4 a.m. tweets, but like I found the Nokia, like the Nokia, he called the bottom on that one, like this exact day on that tweet, on the 4 a.m. tweet. So I really, his 4 a.m. tweets for some reason they're just the best for the inverse. So that's something to keep in mind. And so he tweeted about tech at like 4 a.m. today, like just really bullish. So it's kind of time for a pullback. I think a pullback would be nice. It's just been up all year pretty much now, and I don't know. I mean, we may see like, to me, just the NVDA just seems like it's getting short-term exhausted. Like you look at the recent runs, you know, it'd be up like 3 weeks, 3, 4, 5, 6, yeah, about like 2 weeks or so, and then it would have a pullback, and it's been up like about the same amount of time. You know, I'm just looking at it as on the day basis, not really percentage basis, but it's up a lot from that breakout in early January. So it really hasn't consolidated, which, you know, back here consolidated a lot. So well, it looks a lot like, it kind of looks like let's see what 2023 was like. Yeah, I mean, it was 2023 is kind of really just steady and not so much straight up. Like this move right here is like almost parabolic. It's pretty insane. It just needs a pullback to consolidate, or else it could risk like a blow off top or something. Just to technically, like, I mean, the fundamentals are outstanding. I think it's hard to even say that it's overvalued or fairly valued. Like, we just don't know. Like the demand is just so strong for these chips. But just looking at it technically, it'd be nice to get some kind of pullback, at least in the next week or so. But we'll see. Like, I think it's definitely due one, because you don't want to see it go straight up. I mean, it looks like it's going straight up now, and those straight up charts, or like supernovas, they're prone to major blow-offs where, you know, it loses like a lot of that. It can give it all back, or a lot of it back. So that's something I'm watching. Crude oil. Looks like the XLE must be trying to go. I mean, I kind of missed that because it broke that down channel there, and then we're popping out like that down channel break was the signal right there. But once it reclaimed that level, that was kind of that was a good spot, I think, to get long. And the print today is really nice. I mean, look at the volume on rig. It's traded like 27 million shares today. So that looks like a setup, and the XLE is pretty much the same thing. Like, we got a down channel there, and it's got the same chart. So I may just go with the rig. I may go with some rig calls if we break out again tomorrow. But it looks like it. See how it reclaimed this level here, this on that blue line. It got above it again off this channel break. So I think oil might be trying to bottom here in the short term, and yeah, it could easily break over some of this resistance here. So that's worth watching for the rest of the week. And AMC's just that's a bear flag. I should have put this on Twitter, but I found this yesterday. The shorts are just controlling this one, and it looks like that was the bear flag. like it did a failed bottom, like failed reversal, try to pivot there, and that pivot just turned into another bear flag, which you see a lot with these steady downtrender, like I call them like stair stepper down channels. So it just looks like a stair step every day. It's like red, 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 red. You know, so that's when a lot of times you see that they just continue farther and farther, you know, until there's like a real bottom. Because these little weak flags, I mean, the volume was pretty weak, and like I really think it's definitely gonna test that low there, 401. I think the $4 a share. Looks like that's where we're heading on AMC, and it might just blow through it because it looks like I was saying, it just looks like either some kind of short seller control or just combination of just a lot of selling pressure too. So yeah, the NTNX has been running with NVDA, same, and yeah, let's look at some of the EVs because Tesla just reported. Tesla had their earnings and it had a negative reaction. I didn't check the after hours though. I think it was down after hours too. And the charging stocks were down again. So yeah, I think Tesla goes back to like 170, 180 for sure. And NIO's looks like it's trying to break out of that down channel, but it just reversed probably on the Tesla. Because these have all been trading together. This basket of EV manufacturers. Yeah, see, there's the Rivian. Rivian's up on a huge level there. It still hasn't broke through that level, so that's a setup because it could go down to. It still has room to go down to about $12. Yeah, $12 a share is the last support level. So yeah, I wouldn't, if Tesla's not doing so well, then I would think Rivian would be struggling too, because Tesla's lowering the prices and they really seem pretty cheap. Like, I mean, I would buy one if there was if I was confident in the amount of charging stations around me. But the thing is, like, traveling, because like in North Carolina, I've heard that there's only like maybe one charging station from Charlotte to like Greensboro, and that's not really good. But of course, it looks like they're gonna build more of them. So maybe by the time if my Toyota ever dies, well, I'm sure. Well, after my Toyota dies, I'll be open to buying a Tesla. Like, I'm not a Tesla bear or anything. I just don't think it's a great investment compared to some other things you can invest in. But as far as the EV cars go, it's probably the best. I mean, it's obviously the best out of those, but it doesn't take first as far as like a company to invest in my opinion. But I see that sentiment a lot on Twitter. Like, people just they invest in it like as their only position or something, and that's risky. So EVgo. Well, yeah, look at that EVgo. Look, EVgo. It tried to reclaim that level there and failed. So we got a bear flag, folks, on that one. Bear flag. It's funny how I've seen all these bear flags. Like, the market's like doing really strong, and there's always bear flags. So, but that's the thing I like about trading both sides, long and short. You always find opportunities. I just take it indiscriminately. So that's a bear flag. So I totally like I ran out of my puts on those. Like I sold all the monthlies like last month on the charging stocks. So maybe I think the EVgo looks like the best one now because the CHPTs just has some weird strength. It's got some strength going there, probably with that presidential bill or with the I think they were included with the that mandate or that bill to build more stations. So yeah, EVgo looks like the best one. And the BLNK, like this thing's the short squeeze people are looking at this one, so could squeeze any day. The short squeeze people love this one, so they're stocking this one for a squeeze. So I wouldn't expect this one to follow the other ones. But the setup on EVgo is great because it still's got some room down to. We don't have our next support level is like 188, so so the 250 strike or even like maybe 2 strike looks pretty good. So yeah, I covered a lot of stuff. I don't know how long I've been talking. Like the time just flies by when I look at these things. So I'm not even sure, but yeah, it's like 20 minutes. So I'll just maybe I'll look at one more watch list. Actually, I'll look at some more indices because I just had a feeling. I have a feeling there's going to be a consolidation, like a pullback in the market. So let's see if anything else is telling us that. ES is kind of not really. I mean, it's a shooting star, but it's not very prominent. So I think, I mean, the indices look okay except for the Russell, but it'd be nice if the Russell was still going, or would go with the Nasdaq, but it's just the way it is, now. And like you see, yeah, it's like China. I saw a chart from Liz Ann Saunders on Twitter. She was talking about or it was the parity between China and U.S. like the equity markets. It's like the highest it's been since the separation is highest since like the early 2000s, like 2001. So in other words, like the U.S. stock market's been going up and China's been going down. So the spread, the difference between the two is the most since 2021, like 2001, like 20 years ago. So, but I did put on some China calls with KWeb because that news could push it up, and the news when China puts out a press release like that, they're gonna do stimulus. That usually does something for for at least a few days, a couple days, So I wouldn't be surprised. I think it's gonna run another day maybe. I mean, I was kind of late, but I was a little late on this, but I wouldn't be surprised if it goes another day or two. So I just kind of put that as on speculative KWeb, like 2550 strikes, and Baba can run too. I mean, look at Baba. It's in a runaway gap mode right now. So we got, yeah, look at that. We got a broken downtrend on Baba. Baba's actually Baba's a good company. Like if I'm not mistaken, they even have an LLM. Like they're really big in the tech and probably one of the best companies in China, at least that I know of. So looks like it broke that downtrend level. So yeah, I wouldn't be surprised if we hit back up to like $82, $81, that next level there. Looks like it's right there. So about Yeah, about like 80 bucks, 81 bucks a share. I almost put those calls on too because I've traded BABA in the past and this thing can gap up like crazy. Like that gap up the other day was huge. And but that's the gap ups are really nice with the options. Like that one time I traded it, it was like 100% gain at least just in the overnight session. And but that's my favorite China one to trade, other than just the ETFs themselves. So yeah, I don't, the K-Web's better than the FXI. Like these companies are just better because they're tech, you know. To me, in my opinion, but I wouldn't be surprised if it goes back up to 27, 26, that next level. Looks like the next level is like 27 bucks, so that's why like I felt like I could go a little more out on the strikes. I think they're still mulling over the stimulus, so it's still there could be even better news, you know, who knows. But it's pretty speculative because it's not really like a one of my bread and butter setups. So, but I'll wrap it up there, and I think I covered about everything. So I'll catch you in the next one.